very good morning. So the topic today's session is related to international trade, and the topic is balance of payment. Okay, in the subject international trade, uh, the particular topic is balance of payment. Okay, so balance of payment is like if you take any company. So first let me explain what is balance of payment and the purpose of preparing the balance of payment. Okay, so this is related to international trade. You all know what is international trade, right? It's all related to, it's all about export and import. Okay, so why this balance of payment is needed and what is that actually? So balance of payment, like if you take any organization, okay, any company, if you take, so they maintain, there will be an account section, right? And the purpose of having account section is to record the daily transactions. Yes, if you visit any company, okay, so they'll be having a separate accounts department. What is the purpose of having accounts department? It's all like, it is to mainly to record what is going out of the company and what is coming inside the company. So to record the daily transaction, only then the company will know at the end of the month. Yes, the company will analyze where it is, what is the profit and loss and balance of payment. Okay, so to analyze that, the company normally what they'll do, they'll record daily transaction. So understood? Same way for a country. Okay, suppose if you take India, so India is doing tons of exports, okay, in quantity I'm telling, okay, every day. Okay, so millions of transactions are done every day, and it has to be recorded somewhere. Yes, so all those transactions every day, whatever happening between India and rest of the country, so those transactions have to be recorded. Yes, so for that they maintain this balance of payment. Okay, so the book, it's a bookkeeping. So you all know bookkeeping. Yes, so all the credit and debit transactions will be recorded. Yes, that concept we call it as bookkeeping. So this is also, balance of payment is also a kind of bookkeeping where all the transaction between India and the rest of the country, it gets recorded. Okay, it gets recorded in this balance of payment. Okay, so introduction, the balance of payment, it is the method the countries use to monitor all international monetary transaction at a specific period. Okay, so it's a systematic summary of recording all the credit and debit transaction between India and the other rest of the country. It's a systematic summary, okay, of recording financial and the economic transactions. Yes, and BOP is calculated. When the BOP is calculated, if you ask this question, the answer is BOP is calculated every quarter and every calendar year. Calendar year, you know, April to March. Yes, and quarterly, every 3 months. Quarterly in the sense, every 3 months this BOP is recorded, and they will analyze what is the status of the country's economy. Okay, economic status of a country is analyzed by looking into this balance of payment. Is that clear? Yes. All trades conducted by both the private and public sectors. So what are all the transaction considered? Means like the transaction done by all the private and public companies. So it is accounted into the BOP. Okay, the companies doing export and import, both private and public companies. So all those transactions are recorded in BOP to determine how much money is going, coming in and going out of the country. Okay, it's every day bookkeeping system. Every day transaction will be recorded in BOP. Yes. Is that clear? Okay, in order to know how much the exports is done and how much imports are done in a day between India and other countries. Yes, so hope you understand and the concept BOP, what is BOP and the basic purpose of maintaining it. Yes, understood? Okay. So if next, if a country has received money, this is known as credit, and if a country has paid or given money, the transaction is counted as debit. So you know what is debit and credit? Yes, yes. The money, if it is coming in, it's a credit. If money, if it is going out, then it's a debit. Same way, if you are doing import, then it means we are purchasing something from other country and we are supposed to pay. So the money, it leaves out of our country. In that case, the imports will be recorded in debit side. Because why it is recorded in debit side? Because we are paying and the money is leaving our country. It is leaving out of the country. Okay, so the import transactions are recorded in debit side. Okay, and credit side, if you take like if you do exports, if a country is doing exports, then it means we are selling something and in return we get the money into the country. So it is recorded in credit side. So as like the normal balance sheet, here also the BOP also has what? Debit side and credit side. Debit transaction and the credit transaction. So whatever is purchased, whatever is imported gets recorded in debit side, and whatever we are selling out of India, from India, then the transaction will get recorded in credit side. Yes, understood the BOP? So theoretically the BOP should be zero, meaning that assets and liabilities should balance, but in practice this is rarely happens. Okay, so balance sheet, it should get balanced. Yes, what they'll do, the company, they'll try to balance the balance sheet at the end of the year. Yes, all the miscellaneous expenses, whatever was done for the whole year, so they'll record and finally they'll try to balance it. Same way, here also the balance of payment should get balanced. Okay, should get tallied, and the tally, it happens rarely, because the reason is normally if imports is leading, if imports is higher than exports, then it becomes deficit. Okay, in Tamil we could say பற்றாக்குறை. Okay, பற்றாக்குறைன்னு சொல்லுவாங்க. So that is deficit. Surplus is like if the exports is higher than the import, then that becomes surplus. Okay, so if a country, any country, not only India, if you take any country in BOP, if the credit side is higher than the debit side, then that means a country is having a surplus. Okay, a country has got more reserve. Okay, a country has got more assets. Okay, and if the debit side is higher than the credit side, that means payment is higher than the paying outside, okay, is higher than the payment inside, then that becomes deficit. Okay, so here if a country's balance of payment is having surplus, then that means economy is said to be healthy. Okay, if it is having deficit, that means it needs some focus. Okay, something has to be corrected to balance BOP. Understood? Yes, it has to be balanced, both debit and credit side. Yes, clear? So why the BOP, like it rarely get tallied? Here they have mentioned the BOP. So normally 90% we always have deficit. What is the reason? Because we are like dependent on many products from other countries. Okay, for example, petroleum, crude oil we are importing, okay, per year. So many barrels, lakhs of barrels of crude oil are imported from other countries, and gold, okay, gold also, like every year say around 1,000 tons of gold, around approximately, okay, it is imported from other countries. So majority of the reserve, it is going for gold and crude oil, okay, because the demand for petroleum is getting higher every day. Yes, early days we had only one car for a family and one two-wheeler, okay, but now what is the scenario? What is the scenario? One individual is having two vehicles, and one family has got two or three cars. One person is having one car and one two-wheeler. So likewise, the demand for petroleum increases every day. So we are like depending on other countries to get crude oil, because here the production of crude oil is very minimum. So we are getting it from other countries, say from, for example, from Saudi Arabia, Iraq, Iran, we are importing. Okay, so we have to pay a lot for purchasing crude oil. Same way gold, usage of gold in India, yes, it is increasing. The demand for gold, even if it is goes to 8 gram of gold, if it goes to 50,000, people are ready to buy gold. Yes, till today, yes, you can see more number of crowd in jewelry shops. Every day the gold rate is getting high. Yes, but still you can see the crowd in jewelry shops. Yes or no? So the demand for both these products is getting higher and higher. And not only this product, other products also, like we are purchasing from other countries. Okay, so the demand of import demand is getting higher and higher every day. Okay, so the balance of payment, it is rarely get tallied. Okay, so the deficit only we face. Clear? The surplus very rarely it happens. Okay, because that means purchase from other countries is higher than the payment what we are receiving from other country. This is the reason, and this crude oil and the gold I said, no. So this is just the example. Okay, majority we are like the India's reserve, it is spent for purchasing these two products. Yes, for that only Indian government, they are like taking effort for bringing EV vehicle. Now EV vehicle, launch of EV vehicle is getting day by day, it is increased. Yes, so Tata, it is like a four-wheeler Nexon, it is like fast moving four-wheeler vehicle in EV. Yes, you can nowadays you can see more of EV vehicles. The green number board, if you see, that is EV vehicle. Yes, many number of vehicles you can see on roads. Same way two-wheelers. Many companies they have started manufacturing EV vehicles, and maybe within another 10 years or 15 years, so like you can see diesel or petroleum vehicles on road in India. So the government is planning for that, and they are encouraging the four-wheeler manufacturing companies, mainly central government. Okay, so they are giving subsidies and other benefits for these bigger companies, whoever is ready to produce this EV vehicle. Okay, so in order to encourage the production of EV vehicle, the government, both central and state government, they are giving lot of benefits for these manufacturers, so that they could able to produce EV vehicles in a minimum production cost, so that the price, okay, when it comes to the market, the price level will come down. Now right now the price is a barrier. If we want to purchase EV car or the two-wheeler, so minimum you have to spend 1 lakh. Yes, more than 1 lakh. So in future, within another few months, the prices we are expecting to come down, and the EV vehicles, it will be in affordable price. Okay, so understood the BOP? Yes, so in order to reduce the expenses, so can you able to connect this point what I said now, the example EV vehicle and the BOP, because we are spending a lot for buying the crude oil, petroleum. So government wants to stop that. Only then we can able to save some money and we can able to balance this BOP. Okay, we can able to face surplus at least in the coming days. So for that, definitely we have to reduce the cost of cost for spending petroleum and this gold also. Okay, yes. Next, what are all the key components of BOP? So current account, the segregation of BOP. In what way the transactions are recorded? Heading. Okay, so current account, capital account, official settlement account and unilateral payment account. So it is BOP is segregated into 4 heads, 4 divisions. So under 4 divisions all the transaction will get recorded. Yes. The current account is used to mark the inflow and outflow of goods and services into a country. So under current account heading, so the inflow and outflow of exports and imports of goods and services are get recorded. Then capital account is where all international capital transfer, capital is money, money transfer is recorded. And in the financial account, international monetary flows related to investment in business, real estate, bond, stocks are documented. Okay, so BOP records all the transaction, okay, including investment, foreign direct investment, okay, the companies that are coming to India, if it is investing in business, okay, then shares, okay, if company from outside India, if it is investing in Indian share market, then real estate, tourism, everything gets recorded in BOP. Yes, and if the country is giving some gift item to India, or helping, if something has happened and country is helping in the form of subsidies, then that will also be recorded. So all give and takes, okay, between India and other country, everything is get recorded in BOP. Okay, under 4 heads. Yes, the current account is, yes, next. So balance of payment deficit, I said no. The country imports more goods, services and capital than its exports. I said already, right, what is deficit and what is surplus. If a country is doing more imports, then it becomes, the balance of payment becomes deficit. Okay, then it must borrow from other countries. If a country's BOP is showing deficit, then it means there is a lack of money. Okay, then what it has to do? It has to borrow from other countries. Okay, then in the short term, this fuels economic growth. So if it is existing for a long term, then obvious it affects our economic growth. Then in the long term, it will have to go into debt to pay for consumption. So long term, the country will have more of debt, okay, and it has to repay. If it is borrowing from other country, it is a debt, right? Yes. Let the country கிட்ட இருந்து வாங்கினா அது என்னது கடன் இல்லையா debt is கடன் வாங்குறது then what it has to do in future, it has to repay all those debts, then it will become a big burden. Yes, and it can't invest in further developmental activities. If a country is keep on borrowing from other country, so it cannot able to concentrate on other developmental activities. So BOP deficit will have this negative impact. Yes, then surplus is like a country exports more than it imports. Okay, whenever the exports is taking a lead than the import, whenever exports is higher than the import, then it means a country has got surplus. Okay, then a country provides enough capital to pay all domestic production. So if a country is having surplus, then it can able to concentrate on domestic production. Okay, it can able to help the domestic producers by giving more credit facilities, schemes, yes, then subsidies. Likewise, it can able to motivate the domestic producers so that they can able to concentrate in more production. Then more production will have more exports. Okay, then next is a surplus boost economic growth. Okay, if a country is having surplus in BOP, then it can boost up the economic growth also. Then next, in the long run, it becomes too dependent on export driven growth. So in the long term, country will have more of exports, then that will bring more reserve, and economically and financially it will become strong. Yes. Next. In the long term, the country becomes a net consumer, not a producer of the world's economic output. It will have to go into debt to pay for consumption instead of investing in future growth. So as I said, if a country is continuously having the deficit, then it has to face a lot of issues. Then it will become more consumer oriented activities than the producer. Okay, which one is best? Consumption or production? Borrow. Always getting a product from other country or production in India. Which one is better? Production in India. So that is more better. So if a country is having continuous deficit, then it has to become consumer oriented activities. Okay. Next. If the deficit continues long enough, the country may have to sell its assets to pay its creditors. So, creditors, the person who gave debt, yes, so they are called as creditors. And if deficit continues, then it has to sell its asset. So, country will maintain reserve. A country, RBI, as per RBI rule, a country has to maintain the reserve, minimum reserve. And if the debt continues, then it has to sell its assets like gold, then foreign currencies, okay, to clear all its debts. So that should not happen. If it is happening, then further it will affect the economic growth of the country. Then these assets include natural resources, land, commodities, gold, foreign currencies, etc., etc., to clear the debts. Okay. Next. Then is the same BOP components, that is current account, capital account, unilateral, official. Next. Current account includes merchandise, export and imports, invisible exports and imports. Merchandise is goods. Okay, merchandise means export of goods and goods. Then invisible export is service. You know service, right? So for example, selling a software to other country, that is goods or service, comes under merchandise or invisible exports. Software, you cannot touch and feel. Yes, merchandise means whatever you could touch and feel it's called as merchandise goods. So for example, selling a software, then tourism, banking services, insurance services. Okay, so all these categories come under invisible exports and imports. Merchandise, exports and imports are goods. Okay, whatever is exported and imported. So that is all recorded in current account. See, under current account, credit side, debit side. So this is the basic structure of country's BOP. So that will have credit and debit side. So current account will have merchandise, exports, then that means sale of goods, then invisible exports, sale of services, then transport services sold abroad, then insurance service sold abroad, foreign tourist expenditure in country. Okay, so for example, if a foreigner is coming to India as a tourist, okay, and here it's a income, it's a receipt. Okay, so that income is recorded under current account, credit side. Okay, it's an income to a country. If a foreigner coming here spending dollar, and dollar is converted into Indian rupee, so it's an income for the country. Okay, that's why the government, it is also focusing on tourism nowadays. Okay, so tourism is another important source of income from government after tax. Tax is a big source of income for the government. And next is all these services, tourism, banking, insurance, then real estate, okay, shares. Okay, so all these are come under invisible exports and imports. other services, then incomes received on loans and investments. Suppose if another country is getting a loan from India, okay, so India will get interest, yes, then that is also recorded in credit side of the BOP. Then that side, merchandise imports, invisible imports, transport services purchased abroad, then tourist expenditure abroad. Yes, from India, if we are visiting as a tourist to other country, then our Indian currency is leaving our country and we are spending that in other country. That means that will be recorded in debit side of the current account. Then other services purchased from abroad, then income paid on loans and investments in the home country. So India also borrowing from other country as well as from IMF, from World Bank. So these are all big source of borrowing, okay, and India borrows and it pays, it repays the amount with interest as like the normal loan. Yes, if you get loan from bank, you are supposed to repay it with interest. Yes, same way if the country India, like if it is borrowing from the bank, World Bank or IMF, whatever, from other country, it has to repay it with interest. So that kind of spending is get recorded in debit side of the current account. So clear how the transactions are segregated? So understood what is mean by merchandise exports and invisible exports? Yes? Yes? Okay. Then next, capital account. So under capital account, foreign long-term investment in the home country, direct investment in the home country, foreign investment in domestic securities, other investment by foreigners in the home country, foreign government loan to the home country. So this is, capital is money. Yes, all money related transactions will get recorded under the head capital account. What? Credit side. Okay. So if some foreign company is investing in India, so that is called foreign direct investment. Okay, a company from say US or Russia or Germany, if it is investing in India, if it is starting a production unit, manufacturing unit here in India, then that means investment is an income. Okay, so that will get recorded in capital account. Then foreign government loan to home country, then foreign short-term investment in the home country. Same way, debit side, if a company from India, it visits foreign country and if it is starting a branch office, okay, or if it is starting another business unit in foreign country, then it means our currency is leaving out of country. Okay, so that will recorded in debit side of the capital account. Okay, understood this capital account? So capital account is nothing but all money related transactions, whether it is coming in or going out of India. So all those money transactions will get recorded here. Okay, capital account. Unilateral transfer account, credit side, debit side. Private remittances received from abroad, pension payment, government grants received from abroad. So private remittances means, I will tell you, if a person moving to a foreign country for a job, he is getting a salary and he is sending here. Okay, then it will get converted. Suppose if a person is employed in United States, US, and dollar, he will get his salary in dollar, and if he is sending here, family is in India and if he is sending his salary, then automatically the dollar will get converted into India, and all those kind of transactions will get recorded in unilateral transfer account. So that is called private remittances. Okay, so whatever is received as a salary or the business income, whatever it is, from other country to India. Then government grants, pension payments. Okay, if I worked in foreign government and after retirement I am coming here and I am getting the pension payment every month from foreign government, then that is also will get recorded here. Okay, in credit side. Then government grants, if a foreign government is giving grant, okay, to India, then that transaction is also recorded in credit side. So same way, private remittances abroad, debit side, pension payment abroad, government grants abroad. If Indian government is giving grant to other country, or if a foreigner coming here, he is getting salary and he is sending to foreign, to his family, then that is a private remittances recorded in what? Debit side. Okay. Then official settlement account, official sales of foreign currencies or other reserve assets abroad. So official settlement is like India will have reserve. I said earlier, India will maintain always, as per RBI rule, it has to maintain the assets in the form of gold, foreign currencies, etc. So sometimes, it has rights to sell its assets. Okay. So if it is selling, then it will be recorded in official settlement account, credit side. Yes. Same way, official purchase. If a country is purchasing foreign currency from other country, then that will get recorded in debit side, because it has to pay for purchasing the currency. Okay. When this sale happens, if a country BOP has surplus, okay, if it is having surplus, then sometimes it will sell the foreign currencies to other countries and it will get the income. Okay, in that case, all those income will get recorded in credit side. Disequilibrium. Sometimes the BOP will have disequilibrium. Yes, disequilibrium is either more surplus or more deficit. Okay, surplus itself is rare and more surplus never happen. Okay, deficit always there. Okay, because I said the reason why the country maximum of the time it is facing deficit. Okay, so next. So what are all the reasons for disequilibrium in BOP? Why that over surplus or the minus deficit happens? Because of these three reasons: economic, political, then sociological factors. There are three major factors that affect BOP. Okay, next. So economic factor is development disequilibrium, capital disequilibrium, large import for various developmental activities. A country cannot stop import. That is not at all possible. Even if India is thinking about to stop purchasing crude oil, what will happen? India is taking decision to stop purchasing the gold. What will happen? What will be the situation? Huh? So situation will become poorer. Yes. So it can't stop import. Okay. So large import for various development activities sometimes lead to surplus or more higher deficit. Then money movement affects import and export. Sometimes the money flow itself will be less, then that will sometimes affects exports and imports. Then secular disequilibrium, creating artificial demand. High disposable income leads to high aggregate demand and high price. If a person is having, or if the society is having more disposable income. What is disposable income? I already told you in earlier classes what is disposable income. After fulfilling your basic necessities, if you have got additional money for spending luxuries, then that will be called as what? Disposable income. So if a person is having more of disposable income, what he will do? He will purchase all unnecessary products. Yes? The products which is not at all needed for me, but still I will purchase for the reason image, societal image, self image. Yes, in order to have show off, in order to maintain my dignity in the society. There may be